Yes, hello everyone. It's your boy Alpha from Simple Market FX, and today we are in class 5. I'm in session 5 of our training from beginners to pro. And today we're going to cover some few topics. Let's continue with our okay. So today we're going to learn what is a pip. What is a pip in Forex? So a pip, you have probably heard of the 10 pips or points or pipettes and the lots thrown around. And now we're going to explain what they are and show you how their value are calculated. So what the heck is a pip? It's a unity measure to express the change in value between two currencies. That is what we call a pip. So if you have a USD from a price level of 1.1050 to 1.1051, the difference between 1050 and 1051 is what we call it as a pip, in which we take 1.1051 minus 1.1050, we get a difference of 0.0001. So that one, which is the fourth decimal, is what we call it as a pip. So a pip is usually the last decimal place of a price quote. Most pairs go out of four decimal places, but there are some exceptional like Japanese yen. So on USD pairs and other currencies, they have the number of calculating these pips with 4 decimal places, but the difference is JPY pairs. On yen pairs, we have only 2 decimal places. For example, EURUSD, you can see we have 0.001, and for USD JPY, you have 0.01. So we start counting our pip on that second decimal place of the price. So what is a pipette? There are Forex brokers that quote currency pairs beyond the standard of 4 and 2. So decimal places to 5 and 3 decimal places. These are quoting fractional pips, also called points or pipettes. So the fifth decimal places on the 4 decimal places number, the fifth one is what we call it a pipette, and the fourth one is what we start to count the pip. So if the concept of a pip is not already confusing enough for new Forex traders, let's try make you even more confused. Let's try to make you even more confused and point out that a point or a pipette or a fraction of pip is equal to a tenth of a pip. Just forget about this. I think I have typed it. The concept of pipette. These are all blah blah. So what the aim here is to understand the fourth digit is a pip, and if we see 5 decimal places, the fifth number is what we call a pipette. That's it. So let's see another how to calculate the value of a pip. As each currency has its own relative value, it's necessary to calculate the value of pip that is particular currency pair. In the following example, we'll use a quote with 4 decimal places. So let's see, Euro USD card is 1.0200 to be read as a USD. 1 USD equal to 1.0200 Canadian dollar. I think this from previous classes, you have understand how to put this in a ratio form. So if you want to calculate the pipette, there are a lot of units, but for us, we don't prefer to use this much. So I'll send let me do this. Let's idle. And if we do this, that's try to release. So let's do this. One thing. And let's do this. Oops. Okay, leave it as it is. So we use this tool here. Where is it? Yeah, we have a long position, short position. I will explain. If you haven't watched the how to set the trading view, then we have some tools here. So here we use the price range to count the number of pips. As I told you that if you measure from that high to this low, we have a 40 pips difference from this highs here to this low here. That's how we use the tool to measure the number of pips. And if you want to measure the long, you want to measure from this low to this high, you have 21.4 pips. That's how we use to measure the pips in USD JPY or any currency pair that you want to analyze or to measure it. So let's continue. That's the tool we use. So all this, to calculate all this is just a blah blah. You don't need to do it manually. We have a tool to use to calculate it. So to calculate the value of pip, it's not necessary to do it manually. There are software that are special for that, because aim is to find position size, and we use my FX book app, calculate the number of pips, refer to the position size, calculate video, all this, explain it on the video concerning how to use the trading view, how to set your trading view. So how to find a pip value in your trading account currency. The same way you use my FX books. If you haven't watched the video explaining the dip of my FX book, how you can use it, just refer to that video on the link. I will share the link on the description below. Okay, what is a lot in a Forex? Forex is commonly traded in a specific amount called lots, or basically the number of currency unity you will buy or sell. A lot is a unit measuring a transaction amount. When you place an order on a trading platform, order are placed in size quoted in a lots. It's like an egg carton. This one is the concept that explains we don't buy single quantity, we buy in a unity quantity. You don't buy only €1. We are buying a quantity of euro in order for Forex markets to move. So for the lot size, we had standard, mini, micro, and nano. For the number unit, we buy standard lots on 100,000 units. For mini, we buy 10,000 units, micro 1,000, nano 100. Some brokers show quantity in lots, while others show actual currency unity. Now, all these, if you want to read more in depth on this, I will share the PDF to the free Telegram channel. Now, let's assume we'll buy using, so all these are calculation on how to calculate a unit. If you want to read it, go download this PDF today from the Telegram channel. How to find the pay value in your trading account, the same way I explain everything on my FX book. So what the heck is leverage? This is another thing we need to cover. So you are probably wondering how a small investors like yourself, can trade such a large amount of money, while you deposit a very, very small initial capital. So think of a broker as a bank who basically front you $100,000 to buy currencies. All the bank asks from you is that you give it 1,000 USD as a good faith deposit, which it will hold for you, but not necessarily keep. Sounds too good to be true. This is how Forex trading using leverage. The amount of leverage you use will depend on your broker and what you feel comfortable with. Typically, the broker will require a deposit, also known as a margin. So for the margin is what we know as our initial capital that we deposit on our accounts. Once you have deposited your money, you will then be able to trade. The broker will also specify how much margin is required per position or lot traded. For example, if the allowed leverage is 100:1, that means you wanted to trade a position worth 100,000 USD, but only have 5,000 USD in your account. No problem. Your broker will set aside 1,000 as a deposit and let you borrow the rest. That's how we use leverage as a borrowed money from the broker or our liquidity providers. Of course, any losses or gain will be deducted or added to the remaining cash balance in your account. And the minimum security margin for each lot will vary from broker to broker. So every broker has its own margin for you to place a trade concerning any different pair, indices, or commodity. So in the example above, the broker requires a 1% margin. This means that Every 100,000 USD traded, the broker wants only 1,000 as the deposit on the position. Let's say you want to buy one standard lot of USD If your account is allowed 100/1 leverage, you will have to put 1,000 USD as a margin. The 1,000 USD is not a fee, it's a deposit. You are only initial capital which you deposit on your account. So you get it back when you close your trade. This means when you open your trade, we use that 1,000 USD as a fee, not as a fee, but as a deposit for you to be able to trade that price or that pair. That's how we use leverage on our side. So the reason the broker requires the deposit is that while the trade is open, there is the risk that you could lose money on the position. Assuming that, there are a lot of things to explain. How the heck do you calculate profit and loss? So all these, let me do this. So here, let me use the physical one. I think this one, let's see, 15 minutes. Okay, we have this validation level here. Maybe price may continue going up at what about 1. Okay, now for I took this USD trade for short, just an intraday trade. Let me do it practically. So we are going search in a deep way. Here we have the structure, we'll reach it. So I just want to show you the key concept, how to calculate, how the heck they calculate profit and loss. So to calculate profit and loss, let's back on the screen. We use this tool at the short and the long form. This explain how you can take a trade. So for here, we said we want to sell when price reaches this level. Let's do to 30 minutes. When price reaches this validation level here, don't focus on what we call validation or anything else. We will explain it later on the future classes. So the gray side, let me do this. The gray side is your stop loss direction level. I know you understand about the stop orders. So here 14.1 pip, and we are targeting 48.7. This is the 1 to 3 risk to reward ratio. So for this case, if your price exceed above this and it hit your stop loss level, you will get that as a loss. And if you hit this, the price cross up below this level, which is 139.152 here, this is where you get that with the profit. That's how you calculate. But for you to do it is, let's say, okay, so let's say you have 100 USD and you have, let's do the 15. Okay, you have 15 and you are targeting 50. Now you risk, you have 1,000 US dollar on your capital and you are risking 15 pips. You're risking 15 pips. And the target 50 pips. So this is the front classes, but let me do it now. We have something known as a lot size. I will tell you how. So if you use a 0.1, means each pip is equal to $1 for 0.1. So for this case, you will be risking $15 and target $50. That's how you calculate. So each one pip, if you use a lot size of 0.1, we'll count it as a single pip equal to 1 USD. So for that case, you are targeting 50 pips. Here we target stop loss, let's say stop loss 15 pips. And target, we are targeting 50 pips. So 15 pips for stop loss is equal to 15 USD, and 50 pips for target is equal to 50 USD. That's how you calculate your risk. So more of this will be done on the My FX book video. Don't forget to watch it. Now let's do this. Let's see what we have next on today's. So bid and ask. Remember, when you enter or exit, you are subject to the spread, the bid and ask. When you buy currency, you will use offer to ask. When you sell, you use bid price. You use bid price. Now that's the end. So bid and ask, I think I have explained it very well on the previous session. So for today's lesson, we'll learn how to calculate these pips and what tools to use. More of this will be explained on the coming session videos, or you can learn it from the previous video concerning the how to use the TradingView tools. Okay, nothing much to say for today, just only those things to cover and more of it. Don't forget to subscribe, like, and leave a comment on what you would like to see in the coming lesson. Thank you so much. Have a nice day.